Obviously, this is an incredibly important panel today. We've heard quite a few panel discussions today already, and although the topics have been different, all of them have touched on regulation in some way. So I'm really honored to be in this room and sitting with such esteemed colleagues here on the panel. I'm just going to take a minute to introduce them, and then we have 40 minutes or so to cover all of crypto regulation. So we'll see what we can do. Sitting directly to my left here is Louis Cohen. Louis is the co-founder of DLX Law. Prior to his dive into the crypto space, Louis spent over 20 years representing clients at traditional capital in the traditional capital markets as a partner at some of the world's top elite law firms with a focus on securitization. That being said, we'll move on to Jeff here. Jeff is the founder and principal of Bandman Advisors, an advisory practice helping startups and global law firms meet strategic innovation and regulatory challenges and define new business challenges or business opportunities. Previously, Jeff was at the CFTC, where he helped start the CFT's FinTech group, FinTech Lab, hoping you can speak about that in a little bit. As I said earlier, Jeff is also a 5-time champion on Jeopardy, but please answer these not in question format.
It's confusing enough, is it?
Following Jeff, we have Ian Darrow. Ian is an attorney and software developer, rare mix here, who currently serves as the senior counsel for Protocol Labs, where he's worked on many legal, regulatory, and policy issues critical to the success of the decentralized web. Previously, Ian was general counsel and chief regulatory officer at LedgerX, where he led the regulatory effort to create the first entity with a CFTC license to handle customer Bitcoin. Prior to joining LedgerX, Ian practiced law in Washington and was also a first infantry officer in the U.S. Marine Corps, so thanks for your service. After Ian, we have Daniel Wen. Daniel is a venture partner at OGC and the head of global ecosystem development for the public blockchain project Ontology. At Ontology, he's been instrumental in establishing and nurturing several key eco partnerships, as well as leading investments in these partners. Previously, Daniel was also from traditional finance at global investment banks. Daniel was at the speaker dinner last night, and he asked me if there would be wine for our panel today, because it would be a tough discussion. And I said, wine or whiskey, I guess we'll see at the end. Awesome. So I've taken a few minutes to introduce the speakers here, but I'm hoping that you guys can just go down the line here. Let the audience know if there's anything I missed in the bios, but more specifically, tell us how you went from your careers in traditional finance or law and got into crypto originally. If you could just spend a minute or two saying that.
OGC, just talking about OGC, is a venture fund in blockchain space. It's relatively new, founded in 2017, but we're expanding. We have invested in a few quite leading projects. Some of our portfolio founders are actually in this conference. Talking about how I got involved, from traditional finance world to this blockchain, it's very simple. I was a latecomer. I got into study Bitcoin because I thought, these are a whole bunch of very clever scammers. Let's study how they did it. But when I read more and to learn more, I found out it's something different. It has a great potential to change almost everything here. Then in 2017, I joined on Chain, then I joined Ontology to explore this world. Put it simple, it's just like that. Yeah.
So I got into this space, I think like a lot of people, I was born a geek, and then 30 some odd years later, here I am. I think what ended up happening was that I was a lawyer who also understood technology, which in this space is a little bit of a superpower. So I was working at a law firm, and I met the CEO of a company that was applying for a regulatory license to handle Bitcoin. And it turns out that if you have someone who understands the regulatory world and also understands the technology at a pretty deep level, you can avoid making these sort of easy analogies that lawyers frequently make that fall apart under scrutiny. And you can convince regulators that they should actually let you take advantage of the unique guarantees that the technology gives you rather than just a one-size-fits-all approach. That's how I got started, and it's worked out pretty well so far.
Great. Good afternoon. Jeff Bandman. Just one additional current activity. In addition to my consulting business, I just finished teaching a seminar for Yale undergraduates on blockchain and global affairs and virtual currencies. So the importance of learning about kind of blockchain and cryptocurrencies is obviously the one thing that Harvard and Yale can agree on these days. So for me, my backstory, I guess I really first started looking into cryptocurrencies in early 2014, where the founders of R3, which is now a kind of big technology consortium, reached out to me and they're like, Jeff, have you heard about this Bitcoin thing? And I said, well, isn't that just for money launderers and criminals and terrorists? He's like, no, there's a lot more to it, and sent me some stuff to read. And so I started kind of reading up about it. And actually the thing that really, for me was a big kind of wake up, which also happened in 2014, was that after there was this Silk Road, which was this kind of criminal dark web set of activities where people paid for things using Bitcoin, but then afterwards, after the government seized those proceeds, they then auctioned off the Bitcoin to the American people. And to me, that was a big light bulb moment because, when the government seizes narcotics, they don't auction them off to the American people. When they seize homes, motorboats, jewelries, those they do. So it sort of said, all right, these virtual currencies are more in this category of things that the government thinks are legal than things it thinks are not legal. I then went into regulation, became a senior official at the CFTC, which actually was really one of the first regulators in the world to, I think, really zero in on virtual currencies, partly because people in the space the CFTC regulates were engaging in activities. The definition of a commodity under the Commodity Exchange Act is extremely broad. Really, virtually anything that's a noun can be a commodity. So in 2014, we testified before Congress. We thought it fell into that category. In 2015, we formed a staff working group to start monitoring it, worked with other agencies, including the SEC, Treasury, and international regulators to learn more about it. That work led to the launch of Lab CFTC, which is how the CFTC engages with fintech innovators, and it's just been a very exciting space that I've remained in even since leaving government.
Thank you, Jeff. So, Louis Cohen, I got to the space through the area of structured finance, and I had been doing structured finance rather frighteningly since the early 1990s. And when I kind of came upon blockchain, I said, wait a minute, this is what I've been doing my whole career, because in many ways, when you look at securitizations, what you see is an analog version of a decentralized autonomous organization. And I felt right at home. And really what I've sought to do with my career in our new law firm is bridge the gap between traditional finance and all these new amazing tools we've been given.
Awesome. Thanks, guys. And again, thank you so much for being here today. Just to frame the conversation again for everybody in the room here who may not come from a law background but might be watching the space, Bitcoin appreciated over 1,700% in 2017. And this year, it's been a completely different story. Many of the voices in the space, both from the regulation side and from the operating side, say that this is due to the lack of clear regulation. And today we have a really interesting panel because we have people both from the operating side who are running with cryptocurrencies or blockchain technology at their own firms, and we have people who are advising clients or helping to form policy and regulation. So I'm hoping to kind of see the balance here on the panel today. I want to start off actually talking to Daniel and Ian, and I'd like to know kind of what the biggest legal challenges are that you're facing day to day in running ontology running ontology and protocol labs. And more kind of clearly, I'd like to know what kind of keeps you up at night when you're thinking about the law.
If I want to be 100% honest, we don't really, nothing on the law side actually keeps us up. I want to frame that in a different angle because if you're doing a project, the only thing that occupies your mind, how do I make this thing work, rather than worry about what's in the way. I think that's, from the operator's point of view, that's a mindset here. The only thing is that on the business, because I'm more or less on the business side, the only thing I worry about, that worries me is just, is there anything that really on the regulatory side that is showstopper? If not, we'll push ahead no matter what, whatever whoever says what.
Yeah, I completely agree with Daniel. Protocol Labs is fundamentally a software company, not a finance company or a reg tech company or any of those things. So the things that worry me on the legal side the most are like, how do we structure compensation to attract the best developers? That sort of thing. To the extent that I worry about regulatory issues, it's like you said, it's things that are showstoppers. I'm also not honestly that optimistic about my ability to like get comfort on the regulatory status in the space. So you sort of have to mitigate risk and charge forward as a company. You don't really have the option of equivocating and wondering how regulators are going to think about it more than an absolute minimum.
Awesome. And for Louis and Jeff, do these concerns line up with concerns that you're seeing from your clients? What are the top concerns that are on their minds right now?
So the clients we work with are very focused on regulatory compliance, and the one thing that can be challenging is if the framework for regulatory compliance is not as clear as you would like, and as Ian indicates, it can be difficult as an outside lawyer to give definitive advice when the regulatory framework is not fully settled. But I'm a firm believer that it's the job of outside lawyers to help find solutions and pathways that address the regulatory framework, whatever it may be, and that's what we seek to do, because folks like Ian have to do business, so you've got to figure out and if there are things that don't work, then you got to tell them they don't work. But usually what we try and do is find a way to get there.
Yeah, this is an area where there's a lot of innovation. A lot of these things are still new. That if you think of many implementations of of blockchain or crypto assets as programmable digital securities or programmable digital assets, I think that the innovation is really just getting going, and so it's natural that that would test some of the boundaries, and it is the job of kind of strategists and advisors to kind of take some of that those creative impulses and then kind of translate them and find ways to bridge the gap. I actually do think there's a lot of clarity in the U.S. About around kind of the offering and the development of these markets. There are people who disagree with me, and I usually get criticized on Twitter very quickly when I say this. But I think that there are most sales of digital tokens or crypto assets are considered securities offerings in this U.S. There's not a one-size-fits-all regime. There's, like I say, there are many paths to the Buddha. Right? There are a lot of different ways you can do a legally compliant securities offering and raise money, whether it's in private placements or different types of public ones. I think a lot of people would like traditional regulatory frameworks to be disapplied, and there are other countries where, in fact, they are not applying traditional securities laws and they have more bespoke frameworks. But in the U.S., I think there is a lot of clarity that the principal financial regulators are applying the existing financial regulatory structures to these assets. And then when the innovators come and say, well, maybe you should disapply this provision, or this doesn't really make sense here, if persuaded, they will disapply particular things or provide exemptive relief. But generally speaking, it's falling into the existing regime.
Awesome. That's really good context, Jeff. I'm hoping we can actually just go off that note. One of the big themes that has been congruent across all of the panels today has been this question of institutional adoption. So my question for the panel now, whoever wants to take this, is what are the remaining legal questions that need to be answered before we can get really wide-scale institutional adoption in the space?
Okay. Actually, I'm kind of thinking I'm kind of in the wrong room. The other three speakers, they all have legal background. I should be in the other panel in a way. But anyway, I try my best.
Best perspective.
I try to answer these questions as best as I can. I think I totally agree with what Jeff said. It's very hard to pinpoint specific issue that is outstanding. I think from a practitioner point of view, the most important thing is to get that kind of clarity in a specific jurisdiction. If you look at in the Asian part, if you look at Singapore, it's pretty clear they're putting the payment tokens in the Payment Act. They're getting some exemptions for the STOs as well. In Japan, Bitcoin obviously is already the legal tender. So what we need is more clarity. So when we're doing a project, when we're doing investment, we know where the boundaries are. That's what important. I think I totally agree. In the US situation, I think I read the decentralization kind of comments from SEC as well. But if you read the whole speech, I don't think their stance has changed a lot. It has always been, you have to fit into these how we test all these things. I think that helps. At least you got a sense whether your token fit into this category or that category. A particular fundraising transaction would be fall into that or does. I think that helps a lot. I'm based in Shanghai, in China. That's the jurisdiction where some of these things are not so clear. It's quite clear ICO is not legal, exchange is not legal, but other than the legal status of any cryptocurrency are not so clear. So that's what got you worried from time to time whether I'm doing something that is compliant. I think that's my take on that.
If I just go.
Wait, go please.
Yeah, please. I'm digging back more to my LedgerX days than my open source software company days now. The biggest barriers that we ran into were mostly institutions. Individuals at institutions don't usually have good incentives to take risks individually. So when you have a field where there's not very good regulatory and legal clarity, it's a huge uphill fight to get the compliance and the legal staffs, and even sometimes the operations staffs at institutions to pull the trigger and try something new. So to me, I thought on the legal side and the regulatory side that the lack of clear guidance was creating more doubt and uncertainty in the space than there needed to be. And that made it harder to convince folks that they should take advantage of the technology.
So I would divide it into a couple of different categories, and I agree with what Ian and Daniel have commented. So I think that there's kind of the operational and structural element. I think one of the things that also has been a barrier to institutional investment is that, after the kind of frenzy of kind of the run up in 2017, kind of the use case and the excitement, I think some of that has diminished, and we're starting to see new offerings. I see Josh Stein from Harbor, and they're kind of off doing, kind of the tokenized real estate offerings. There's tokenized IP, so there's kind of new things that are being offered in these channels. So I think that as there are more things that are just more compelling as investments, I think that's part of what it will take. Then there's the other side of kind of the experience that institutions have in dealing with the kind of the crypto landscape. And, there are certain things that institutions are used to. They're used to separation of functions. They're used to kind of trading, clearing, record keeping, a lot of sort of independence, checks and balances, mitigation of certain potential conflicts of interest. Those are in the process of being developed in the crypto space, but those do not exist as broadly and fully as they do. And, so I think that is an obstacle that people are just used to seeing certain kinds of things because this is how they process and absorb other investments. So, for example, with the launch of the Bitcoin futures, most of these companies, many institutional investors are able to operationally and in terms of their policy and their charter, they can process futures. It's just another class of futures investment. So that sort of fits into, a bucket they're familiar with. I think for, custody is something people talk about as a big issue. And I think, even for some of the kind of the early adopter, the institutional investors are not a monolithic group. So, thinking about who could invest in this sector first, hedge funds, family offices, But even they, even if they are skilled at, sovereign wealth funds, they could be kind of the first ones in to invest, but they are not particularly skilled at safekeeping of assets themselves. So I think for them in particular, having a custody solution is important. Kind of pension funds are probably going to be the last to adopt, some of these kind of novel and highly risky things, and they probably should be. But, the last thing I want to comment on kind of to Ian's point. So before I worked at the CFTC, I worked in a derivatives clearinghouse. And after the financial crisis, clearing of OTC swaps was mandated around the world for the sell side and buy side. So this is utilization of a service that the government is telling you have to use. And still, the process of selling clearing into a bank or an asset manager, you had to go legal, compliance, operational risk, there's a lot of different technical checkpoints. And, that's just a process you have to get through to get these organized entities in any new asset class.
Yeah, I would say one of the biggest hurdles at the institutional level is really understanding what this blockchain thing is all about. And in many ways, what draws so many people to events like this, there are probably 10 events happening right now around the world that are similar. And it's something more than reducing cost and adding simplicity. That's an important part of it, but there's something more to it. I believe that's what's driving people into this space. And that is the ability to distinguish, as Andrew Keyes talked about a little earlier, between a business and a protocol or a system in which people can interact. And I think that's what institutions sort of struggle with. And an example I give is, baseball is a protocol. You don't really own baseball. It's a set of rules. The New York Mets, my personal team, are a business. They play baseball. And that is something that we need to get the institutions to understand. What tokens give you is the opportunity to invest in protocols. We don't otherwise have that. We've never had that ability before. And I think that education still needs to happen. There are a lot of cool things that cryptocurrencies can do, and they're maybe a digital gold and store of value. But fundamentally, you have to wrap your brain around what this is truly is more of a movement. And it's a movement about looking at the way business is organized. So I think that, for me, is where institutions really need to understand that. And either you're ready to dive in and engage with that or you're not.
I'd like to follow up to that, Louis. So you talked about the difference between kind of companies and protocols. And as law kind of dives into the nuance of protocols, I think we have this really interesting contrast. And that's the fact that coders aren't typically lawyers and lawyers aren't typically coders. Ian is an interesting example here. So I want to pass the mic back to you, Louis, and talk a little bit more about how regulators can work to actually understand these differences, the nuance between protocols and companies, and how we actually forge that bond between the creators of these protocols and the regulators themselves.
It's a great question, and have one who's spent a lot of time, particularly with the SEC. Jeff, you spent a lot of time with the SEC and the CFTC. I can say with complete certainty that their key regulators in this space are trying very hard, and I'd certainly call out Valerie Stepanek, in particularly, who's an engineer herself, and the SEC's lead person in this space is trying to understand. I think the whole community has been doing a lot to educate all the various regulators, not just the SEC and the CFTC, but also FinCEN and OCC and a bunch of other regulators, DFS in New York State, for example. But fundamentally, we need more than that. We need to demonstrate success. And until there's actually successful protocols that are working, demonstrating and shipping products, it's very easy for regulators to step back and say, you know what, I don't want to make a mistake here. I don't want to get out in front of my skis and be criticized for doing something. And so I think it's incumbent really on all of us who are interested in this space to ship products that work, put them out there, and let somebody say, hey, I think that doesn't work, or hey, I think that's illegal. Because I think if you ship a product that's software and fundamentally works, it's going to be really hard for regulators to say no to that.
Interesting. Yeah, I think that's a good take. Do you want to jump in, Ian, or?
I agree very strongly with the idea of shipping product. The advice that I give a lot of the time, which is advice that lawyers don't give very much, that they should give a lot more, is like, this is really uncertain. This is uncharted territory. Try to do the right thing. Try to do the right thing by your users. Try to communicate about what you're doing and be open and honest. I would push back on the idea that like the existing securities and commodities laws are totally well suited to fit this. I mean, you can definitely say everything's a security and then the problem is solved legally, but the problem on the software side gets much, much worse. But in the meantime, until we have clarity, I think the best way to go about it is to put out products that are ethical and fully disclosed. And you will find out at some point what framework you fit in, whether it be an existing or a new one. And that's sort of terrifying from a lawyer's perspective. But the alternative in most cases is that this thing doesn't exist. And that's an unacceptable outcome from an engineer's perspective. So you just got to go for it.
Ian, could you actually just keep the mic and provide your comments on SEC statements this summer regarding sufficient decentralization? I don't want to go down an entire rabbit hole of securities versus commodities versus whatever law, but if you could comment from the developer side, working with a statement that is generally pretty vague, I would love for you to touch on that.
I'll give you my developer lawyer crossover answer because I've given this a lot of thought. The SEC came out with some statements. I'm not sure it's like generally accepted that they're about sufficient decentralization. Like there's a lot of different takes on this. I think Lewis has one that might be different from mine. My basic take on it is that what is the purpose of securities laws? At a fundamental level, securities laws are there to protect investors from information asymmetry. Okay, so you have highly placed executives or people at a company with inside knowledge. That knowledge is not publicly available. It's unfair for the company to take advantage of that to get money from people who know less than them. That's like a very short, very high level summary. If you have a protocol, a software project that is being developed in the open, that is not controlled by any single person, the information asymmetry is much, much lower than the level of info asymmetry you worry about in a traditional company context. So at some point, there should be a threshold that's reached where it doesn't make any sense to apply the securities laws to a software project, to a token, because all of the investor protection concerns that you worry about are heavily mitigated, at least to the extent they are in a public company. And the cost of complying with them, both in terms of time, but also in terms of like speed and ability to improve protocols and stuff, like that stuff gets really bogged down when you're regulated. So if there's no investor protections and you're going to have a worse product, like the outcome seems pretty obvious.
Yeah, I think what Ian put is like very, very well stated. And, I think that the speech which the SEC director gave has been misunderstood to an extent. And, I've had several either kind of clients or potential clients say, oh, great. We have, we saw this speech. We think it's great. It obviously provided clarity around the status of Ethereum, which, was raising, questions for a lot of people because it put Ethereum in the not a security category, right? But then people said, okay, well, we're just going to, we're going to start up this fund and we're going to have a decentralized thing and we're going to build it and run it. And I was like, no, guys. You are running it. You are starting a company and you are running a business. So that is not decentralized. And in the example that Ian gave, which is really just open source software development, that's not somebody building a business and, running a specific project. And so, I think that it is actually, although I think the SEC tried to be extremely clear in sort of explaining the reasons, explaining about 12 different factors that somebody could look at. But the impact that, that people have taken away from it is like, oh, my business partner and I are going to build something decentralized and then it's going to be not a security. And I think that's the gap, that if you're building a company and you're running it, then there is going to be this information asymmetry. And if you're trying to do capital formation through a raise, that's probably going to be viewed, at least in the US, by the SEC as a securities offering. So, it's because you're controlling something, even though there's this other decentralization, or decentralization is where you're trying to get to in the end.
Interesting. Yeah, Lewis, do you have a comment on this before we take some audience questions?
Yeah, just real quickly. One of the things that's great about living in a country that has the rule of law, or at least something pretty close to it, is that we have checks and balances. And so there are a couple of initiatives at the legislative level that have done a lot. One, as many of you may be aware, Wyoming passed a statute that recognized that an open blockchain token, which is used for consumptive purposes, is not a security. So the legislature has the ability to adopt laws that actually, clarify the situation. Unfortunately, that's only good for within the state of Wyoming, and even then, it has limited utility. utility. However, Congress and the 115th Congress introduced a bill called the Token Taxonomy Act that went in a similar direction at the federal level. That ended, it's going to have to be reintroduced if it comes back in the 116th Congress, but that goes a long way to achieving the same thing. So I think, those, both the state level and the federal proposed legislation send a clear message to the regulators that, look, there is two sides to the story, and we'll adopt laws that clarify it if you can't figure it out for yourselves.
This is a really interesting conversation. I know there are some questions in the crowd here. Yeah, could we take some?
I have a question for Daniel. I know you've been pretty quiet over there. I actually think that your background combines both topics, and I think our conversation has been heavily focused in the US. I think for a lot of international audiences, they'd be curious how it goes in a different country. So I was wondering, in your investment thesis, how do you factor compliance or even regulation in your investment? So do you actually actively invest in a product that actually takes this into consideration in China or abroad? Or you don't look at you're more in taking a reactive stance. So just curious your view.
Oh, sorry, yes. That's I guess that's a very tough question for any fund actually invest in a global scale. You see, I think in the blockchain world, you do see projects coming from all over the world, right? It's just from one place. US and China are among the biggest source of all these projects. So you have to consider the regulatory implications on this. It's a sad story, but if you look at the basis, if you invest in the basis, that's a very sad story. So that's also a kind of wake-up call, because in the past, probably a lot of venture fund investing in this space, they may not put such an emphasis on the regulatory front. But nowadays, you have to be very careful. I think there are probably two ways to do it. At the bottom line, you have to make sure your investment target actually compliant in a particular the regulations in a particular jurisdiction. The other way, the other thing you have to be really aware of is that in terms of valuation, you have to put that factor in. If the regulatory framework is not very clear, you probably have to apply a higher discount to that project in terms of valuation. That's probably the only thing you can do for now. But this thing is just so new. Everything is new. You don't really know what's exactly the right thing to do all the times. Yeah.
Interesting question. Thanks for that. I think we have time to take one more question because we were delayed in the beginning here for some closing remarks. Yeah.
Hi, thank you. Yeah, I'm a developer in the blockchain space. I work for John Hancock, actually. And my question is directed mostly at Jeff and Ian. My question concerns prediction markets in particular. The CFTC commissioner has come out and said he assumes that users that would use prediction markets such as Augur are responsible. But in addition, he said that the developers would be held responsible as well. Now, this was just his statement and wasn't an official ruling at all. Prediction markets are very foundational tools for a lot of the utopian promises of blockchains, and it's very unclear how we're going to arrive at those end goals without them. So I'm wondering, A, when we could expect official clarity on this, and B, what can be done if there's a negative or debilitating ruling on prediction markets.
Yeah, sure. That's a great question. And so, Commissioner Quintens, who's actually chairs the Technology Advisory Committee and is very kind of pro-blockchain, gave a speech in Dubai in October which I think he actually intended as a thought experiment, but he talked about, if these smart contracts, which are prediction markets, reach U.S. persons, and that's a foreseeable consequence, is the developer of the smart contract held responsible? And then he actually, just very recently, within the last week, wrote a follow-up blog on that was posted on Coin Center, which if you haven't seen, because Coin Center really criticized him, and so he's done some follow-up work. But so the CFTC, has the general view of what we would term a prediction market, the CFTC also calls either an event contract. They actually put out a whole big concept release on this in 2008. And they also kind of view these as binary options, where essentially a prediction market is saying either a thing is going to happen or it's not going to happen. And these are typically viewed by the CFTC as you are offering options, and you should therefore go get licensed to be an options market. So you're a designated contract market or a swap market. And there are a number of platforms. There was one that used to be called Hedge Street, and it's now called Nadex, that that is their business, and they're registered, and they, manage, and that's offered to retail people. And it's not the end of the world to have a regulated business. And in fact, customers, may trust that. Now, I think that these prediction markets, do put that to the test. I think that if you are creating something that is a quote decentralized market, but you sort of set it in motion and it's going to reach U.S. persons, there are potentially going to be consequences. Now maybe if it's completely decentralized, there's nobody to do, but if you've sort of set it there and there's no controls, so I think at this point it's kind of a thought experiment. It is something that if you were developing one of those things, you'd want to take a good look at. There have been a couple of specific exceptions, and I actually worked on one of these, that there's an educational exemption. There was one for University of Iowa, and then there was a follow-up to that in 2014 that I worked on that for Victoria University or Wellington University in Victoria, New Zealand. So prediction markets with kind of small amounts that are tied to kind of educational purposes. So there's some clarity around that. If the ones that are commercial, I think that could be an occasion to go in and kind of engage with the CFTC and see if you can find a framework that they can get comfortable with.
This is a great question, and I think the panelists are going to stick around later today to answer any other questions that you guys might have, but we are out of time. I'd love to end this session just by going down the line and in one sentence, telling everyone here what is top of mind as you look towards the end of 2019.
I would say it's two things. One, shipping decentralized products that work and make a difference in people's lives, and the growth and prosperity of the security token market, which I think holds tremendous promise.
Those are good, Louis. I wish I'd thought of them. I really am hopeful that with decentralization and tokenization and programmable digital assets, can we do better? I think a lot of people, if you think about kind of the ethos around, the white paper and, the release of Bitcoin 2008, 2009, it was out of mistrust of, central banks, large financial institutions, and governments. I think that there's a very widespread mistrust of technology companies in the sense that technology is really become much to our detriment, and we are the product. And so really I'm hopeful that some of these innovations can check that balance and have greater individual freedom and dignity.
Totally agree with that. Education at the legislative and regulatory level is what I'm focused on. To Jeff's point, like all the concerns we have about consumer privacy and the backlash that's starting to happen against centralized tech companies, like those things are the result of a structure. They're not the result of individual bad actors at companies. The Silicon Valley model of like attract a lot of users, then sell their personal data to advertisers, like it wins. Like it has a huge economic advantage. Educating folks about the fact that that's structural and the fact that there are decentralized alternatives that have better incentive structures is something I'm excited about for the rest of the year and onward.
I think from investor point of view, you always wish, this is 2019 is probably the end of the bear market, to the moon, right? But more importantly, we want to see, and we believe we are going to see a lot of real adoptions, not just gambling games, but real games, real applications in this year, because we think we have laid a foundation as an industry for the basic commercial grade to actually thrive on already. I'm pretty sure that we'll see something in 2019. Yeah.
Awesome. Thank you, everybody, for coming out today, and please give a round of applause for everyone on the panel.